Welcome everyone to another one of my advanced webinars. Today's webinar is called Value Creation and Advisory 101 for Accounting Professionals. This is not my usual QuickBooks, highly technical accounting software related webinar. We're going to be talking about running an accounting practice, running a bookkeeping practice, and some of the techniques that I have learned over the years in my 12-year journey of running an accounting business, a bookkeeping business, a consulting business, a software advisory business, whatever you want to call it. So this webinar will be roughly between 45 minutes to an hour. I'll definitely keep it under an hour. However, there's a lot of content here. If I wanted to, I could make this an 8-hour webinar. So I'm going to condense what I think is 12 years worth of best practices that I have implemented myself and that I've observed other people implement in their accounting practices. So we'll talk about what is value first. That will kind of be the first topic. What exactly is value from an accountant's perspective and from from an entrepreneur's perspective. We'll talk about what is advisory from my perspective, what I think advisory is and what it isn't. We'll talk about how accounting professionals create value. And this is kind of the bulk of it. This is kind of the great majority of the content, the valuable content, is how accounting professionals create value for their customers, but also create value for their own practice. So their customers are willing to pay for the value that they bring into the table. Then we'll talk about the focus practice workshop. This is the way I coach and train and mentor, whatever you want to call it, other accounting professionals, bookkeepers, CPAs, on how to implement some of the things I've implemented in my practice. We'll talk about that at the end. Then I'm going to give you a list of book recommendations. If I don't get a chance to actually talk about them, they will be listed in there, so you can check them out if you want to. And then we'll have open to a Q&A. Now, just to get started, I'm going to run a quick polling. I would like to know whether or not you're a frequent webinar watcher from the webinar content I create, or or are you brand new to the Hector ecosystem of webinars? Do you watch a lot of the webinars that I offer? Do you only watch or usually just watch the QuickBooks webinars? Would be nice to know. So I got a quick polling question up for that, and I'll leave that up for about another minute or so, and then we'll go ahead and we'll get through. So thank you for answering that. This is useful for me to just kind of get an idea for the people that are here, how many new people are to, let's call it, to my list of webinars per se. Okay, perfect. So we got about 85% of the answers. I'm going to go ahead and end the poll, and I'll show the results. I know some people get eager and anxious about seeing what other people answer. So roughly about 40% of you have seen a handful of my webinars. 26% of you watch all my QuickBooks stuff for sure. 28% for you try to watch anything I create. And 6% of you are new. So that's awesome. So welcome. Hopefully you find my content useful. So let me talk about my journey real quick, just to you get connected with what I've been through personally as a bookkeeper, as an accountant. The name of my firm is actually called Quick Bookkeeping, and it started strictly as a bookkeeping practice. I started in 2008, and I would say about half of the journey was working basically long hours. I was still going to school. I had a newborn. I started my bookkeeping business. I was really learning the business in itself, learning how to run a bookkeeping business, how to market to clients. There really wasn't a lot of exciting things going on, other than I got a lot of practice. I was basically becoming a master of my craft, as a QuickBooks user, as an accountant, as a tax advisor. And one thing is, I did spend a lot of money and effort advertising to get new clients because I didn't understand value creation as a concept yet. Then in 2014, actually this happened in September, October of 2013, I went to a conference called SleaterCon, and I watched Ron Baker speak for the first time, and that message resonated with me in such a level that 2014 to me was my year of enlightenment as a professional, because I learned value creation as a business model, or at least I started to learn value creation as a business model. So when I learned about value pricing and basically went all in on value pricing. I understood the challenge that I had, which is I didn't know how to create value in order for me to be able to price based on value. So I basically focused 100% on learning the art of value creation. From 2015 till today, the one thing I could tell you is, and I'm not telling you that if you do the same thing I do, you get rich overnight. I'm not rich, right? I mean, I think I do well, but I'm not rich. I'm not a millionaire of my accounting practice. But a couple of things that I'm proud of is clients come to me. I don't advertise from a traditional sense. I choose who I want to work with. I love who I work with. I value price. That means that I say no quite a bit to the people that that want to pay less, essentially. And I focus on giving training and advisory work to small business clients, and in some cases to other accountants. If you kind of would love that journey to do more of value pricing, training, advisory services, have clients come to you, I suggest that you take a look at my path and try to mimic some of it. So real quick, I'll make a quick pause to the content, and I'm going to talk about this in detail towards the end of the webinar. I'm offering a 3-week focus practice workshop for accounting professionals. I'm doing one in December right now. That one is sold out. I opened another cohort in January. I'll talk more about it. And there's 3 ways you can participate. You can participate just on the webinar, on the sort of learning content. You can participate on small group coaching. Well, it will be like a webinar plus homework and some a little bit of one-on-one and sort of group feedback, and then a one-on-one mentoring session that will go over the 3 weeks plus follow-up. And I'll talk more about that. There's a link on the slides if you're interested on joining that. But the reason why I'm discussing that is because this webinar is kind of a preview to that, and it's also sort of a precursor of all the things that need to happen in order for you to be able to create value. And in some cases, I know some of you can take the information from this free webinar and execute right away, and some of you might need a little bit more in-depth coaching and possibly some homework and some exercises to be able to learn it fully. So let's dive right in. So in my observation, all successful businesses have one thing in common. Now, this is from my clients and colleagues and other businesses that I don't work with, but I observe, but they have one thing in common. That one thing is they create value for the customers, and in exchange, they get paid for it, and they collect a fraction of that value created. So in other words, a fraction means that you should at least create double the value that you charge for. So you need to aim pretty high to think that if you're going to charge $500 or whatever the number is for whatever service, you need to be giving the client $1,000 worth of services. I've found that every successful business has that one thing in common. Now, this is one of what I think is the biggest misconception that accounting professionals have, which is their perspective of what small business owners, entrepreneurs value the most. Most accountants will answer this, especially when it comes to their relationship with their accountant and the work the accountant provides. So most accounting professionals think that clients value from their accountant accuracy, right? So accuracy in the numbers and the financial statements. Most accountants think that completeness, right? So that's like reconciling a bank account, entering all the accounts, that sort of thing. Most accountants think that when accountants are efficient or they help their clients be more efficient themselves, that's the thing that they value the most. And lastly, the traditional one is most accountants believe that what clients value the most is compliance, right? Tax compliance, that sort of thing. And lastly, this is the classic one. Most accountants would swear that small business owners want their accountants to help them become more profitable or increase their profitability. So there's an asterisk to that, because that is true. Small business owners want more profitability, better profitability, whatever you want to call it. However, I think that how accountants measure profitability and how small business owners measure profitability is very, very different. So why do we think as accountants that these are the things that small business owners value the most? Is because these are easy to measure. So accountants are usually obsessed with things they can measure, and they stay away from things that they cannot. The problem is that most small business owners actually focus on the stuff that's difficult to measure, and there lays the biggest gap between what the small business owner expects their accountant to do as an advisor and what accountants believe being an advisor it's all about. Most accountants believe being an advisor is giving them accurate financial statements and explaining the financial statements to them and showing them, quote unquote, how they can achieve more profitability because that's easy to measure, right? So what I like to propose here is that this is not what small business owners find valuable. This is not what accountants should obsess over offering. It should be something else. But before we get there, we must identify how customers, small business owners, measure profitability. So an accountant measures profitability as the difference between income and expenses. And you can get into whether it's cash basis or accrual basis. That's a different conversation. But in essence, whether it's cash or accrual or hybrid, profitability is the difference between income and expense. However, from an entrepreneur's perspective, and I've talked to many entrepreneurs, done tons of advisory work, and read many books where it led me to understand that entrepreneurs measure profitability as a return on trade-offs. It's not just a numerical value that we see on a financial statement. That's what we accountants think and look at because we know how to measure that. But return on trade-offs are they're very difficult to measure in some cases. So what are some examples of entrepreneurs trade-off? Well, the classic one from the E-Myth, Michael Gerber, is whether or not a particular decision or a particular purchase or a particular partnership with an advisor is going to allow them to spend more time on the business, developing the business versus in the business. Most entrepreneurs spend way too much time laboring in the business just because that's what they know how to do. So what they like to get a return on is if, as a business owner, I leave my foot off the pedal and stop selling, stop closing deals, stop directly supervising the work, whatever type of business they're in, will the quality of work be sacrificed? Will the output reduce? And therefore, is that trade-off worth for me? And an advisor helps someone get return on that decision, whether this decision is to labor on the business or work on the business. And there's stages of the business where both things are important. As I mentioned earlier, on my journey, I spent the first 5 years working in my business, and then the next 5 years till now working on my business, and a combination of the two. I still do work. I still do client-facing work. I still reconcile bank accounts every once in a while. So something to think about. The other thing that is a big entrepreneur trade-off is time spent on neither working on the business or in the business or whatever. Time spent at home, right, with the family, taking vacations. So an entrepreneur makes a decision, can this business move, can this investment, can this purchase, can this whatever decision they made for the business improve my chances of spending more time at home or taking more vacations, or reduce it? There's obviously the classic risk in capital. Business owners always want to risk as little capital as possible, and every major decision to inject capital into the business creates that angst or that stress about their capital being in risk. Generally speaking, being anxious and stressed about customers or quality or long hours or employees complaining, whatever, that's the stuff that they trade off, right? So can I get return on that? So a customer will decide, look, I'll take on this super stressful job. I'll take on this super stressful project. I'll take this huge risk that's going to possibly give me a heart attack. In an exchange, will I get enough money or return for that trade-off? Again, it's not just the monetary value. It's an exchange, right? Having control of their time and making decisions. Obviously, the reason why most people go into business in the first place. Reputation. Business owners want to decide whether or not increasing the price of a product, decreasing the quality of a product, firing an employee, hiring an employee, whatever business decision they make, will that enhance the reputation or decrease it? Not just the reputation of their brand and their business, but their reputation as an entrepreneur, as an individual. Obviously, the dividends, the money you can take out from the business, the fruits of the labor, and returning that capital, and whether or not that decision they're making, it has a positive impact in the world. So as an advisor, you need to figure out how to help the entrepreneurs make trade-off decisions between this and the return or the profitability. So it's not just a number, it's an exchange. So exchange one of these things for something else or vice versa. Okay? Now, from a long-term perspective, and this is more philosophical, and it's also important to think about this because this is sort of your long-term value and impact as an advisor. Can you help your clients achieve these long-term goals? I think of them as health, wealth, and legacy. It's very simple. Health, wealth, and legacy. So every decision that a small business owner makes, when I sit down and give them advice, I think, will this improve your health? Will this increase your wealth? Will this secure your legacy? Every decision that you make as a business owner should be thinking about these three things long term. So health, taking time off, having peace of mind, confidence, right? That sort of thing. Wealth, right? This is the accounting profitability, dividends, and legacy, reputation, impact on the world, your estate, your inheritance, your kids. Are you leaving your kids an income producing asset, or are you leaving your kids a business that they can work on and continue the legacy of the dad, the mom, whatever happens to be? This is the long-term stuff that people value, and it's overly simplified because many times we forget that advisory is not explaining a number in a financial statement. Advisory is helping someone improve their health, increase their wealth, and secure their legacy. Okay, so really quick, the short-term stuff that customers value in terms of the work that they do is, are they creating value for their customers? Are they attracting and retaining talent? Are they having the freedom to be creative and innovate? And finally, are they enjoying the ride? And one of the things I like to think about when I think about enjoying the ride is Bob Iger's book, The Ride of a Lifetime. Great book to read. Basically, the backstory of him as a CEO and his leadership lessons, working for one of the greatest companies in the world, Disney. So I think that when you work with a small business customer, with a small business owner that effectively enjoys the ride, your role is actually much more enjoyable. And if you have a few customers that enjoy what they do, they enjoy the grind and the game and the issues, and they approach them with passion and compassion and patience and energy, you love working with those people because those people understand the value of an advisor, especially when the advisor understands that this is the type of small business owner that enjoys the ride, together with creating value, attracting and retaining talent, and building and creating freedom to create and innovate. So when you talk to a client about advisory, when you have a conversation about what can I do for you, you bring these conversations up. You ask your clients, hey, how do you create value for your customers? And then after you get the answer, you say, how do you think I can help you create that value or more that value or multiply that value, multiply the impact? How do you retain and attract talent? How can my work help you with that? I'm not asking you to learn to do the craft that your business client does. I'm not asking you to become a recruiter and find them talent. I'm not asking for you to teach them how to be creative and to be innovative. I'm asking you to ask your client, how can I allow this to be something that you do freely in your business? So what are the things that hold our clients back? Well, if a customer complains about quality, if an employee complains about not having the tools, the work environment, not getting paid enough, right? If paperwork and compliance, that's the stuff that you can immediately take off your client's shoulder, or you can partner with someone else if you focus on advisory and have someone else that likes to do the bookkeeping, the accounting, and the compliance. Have somebody else do that. This could be a 2-3 person job that provides advisory as a whole to a client. Very classic lack of timely and trustworthy decision support tools. These are having accurate reports, but not the accounting reports. Not the accounting reports. We're talking about decision support tools, management reports, like things that allow them to make quick decisions for them to invest or reinvest their time or money and resources in other things. Also, cash flow shortages that always holds small business owners back. Access to affordable capital. This is huge, right? During the pandemic, there was government programs that gave access to affordable capital, but in the non-pandemic times, this is sort of an art, right? Helping and coaching a client through being able to be bankable and access to capital so they can leverage it when business is good or bad or whatever the business cycle is. I think that having a lack of vision, purpose, or having a bad strategy or a bad business model definitely holds small business owners back. From my perspective, working with the business owners directly, overwhelm and lack of help from their staff or lack of people competent enough for them to be able to delegate work, it's a huge setback to a lot of my small business clients. A socioeconomic shift like globalization, obviously the pandemic, the move to more delivery, the move to more digital type of services, trends in the market, competition, out innovating your clients, regulations, not just tax, just barriers of entry that definitely holds our clients back. Access to high quality raw materials or infrastructure or tools to do their jobs. These are things that hold your client back. And having bad advice or lack of advice. Sometimes bad advice is worse than lack of advice because it gives a false sense of security. So when you sit down with your clients and talk about quote unquote advisory work, these are the questions that you ask, right? How often do customers complain about quality? What's the process to do something about it? How do you improve your product based on that feedback? You can have 1 hour conversations just on each of these topics. So you have advisory topics forever, basically. So what is advisory? It's helping clients create value by improving their health, generating wealth, and leaving a lasting legacy. Now, from my perspective, I think that the best way to describe advisory is creating value for our clients by helping them create value as well. Remember, this is a win-win-win situation. If an accounting professional gets handsomely paid for the work that they do, they win. If the customer gets more value from the accounting professional than what they paid for, and that allows them to create more value for their customers, that's a win for your small business client. And if the end consumer of the product or service that your entrepreneur client purchases, it's worth to them more than what your customer ultimately charges for it, which is your customer's revenue, that's a win for the customer as well. So you kind of have to have that win-win-win mentality and think about not just what your customer needs, what does your customer need to serve their own customer? And sometimes I believe that's the stuff that we forget about, is that everything that we do as an accountant, as an advisor, is not just for our small business owner client, is so our small business owner client can continue to serve their client. And I think that's one of the areas that people tend to forget about quite a bit. And I want to encourage you to think about that as much as possible. So my path to advisory was the following. I started doing data entry. I was a data entry clerk. And basically I moved to bookkeeping when I started my bookkeeping practice. Then I moved into doing system setup, so installing QuickBooks, that sort of thing. Then building custom reports, showing my clients how to run their own managerial reports so they can make decisions and help them build internal controls to make sure that their employees are not doing it wrong, right? That's a little bit of training, a little bit of having them monitor the numbers. Then I moved into tax and compliance. I do tax work. My firm does tax work. And then I moved into just training people how to do the work, training people on processes, and integrating multiple apps and accounting systems together to speed up the time that it takes to put the data in the system to be able to get those reports and get those decision support tools. And ultimately, the highest level of service, I believe, is advisory because it is the most transformative. Now, the one key issue here is that as you move into this from data entry to bookkeeper to systems integrator, trainer, advisory role, the perceived value for the customer goes up. Customers recognize the value of that work naturally. But also, the physical work that you put, the amount of hours that you put, the amount of time that you sweat, the amount of times you need to show up for this type of work actually diminishes as you go up in this food chain or whatever. Most advisors can spend 5 minutes with their clients every month and create as much impact as a person that spends 20, 30 hours doing bookkeeping and accounting or more. So this is where your brain, your knowledge, your experience is more valuable than the actual effort that you put in. So it's just an interesting observation that even though you're working less, customers still perceive it more valuable per minute per second. Now, I'm going through my 12 years of charging clients, and even though I do value pricing now, some of these hourly rates don't apply, but I'm showing these as effective billable rates, so like sort of net after a month worth of work, just dividing that by the amount of average number of hours I work per month. And my effective rate went up from $25 an hour all the way to close to $350 an hour or more effectively as I move up the ranks. I assume that if you are in this path or if you have gone through a similar path, you've seen your capacity to charge go up and increase as you kind of go up this food chain. And for some people, the order of this is not the exact same, but this was mine. And I think that most people, if they go through this progression, they will also see the average rates go up. Now, there's a famous pyramid called the DIKW pyramid, which shows data, information, knowledge, and wisdom, right? Usually, data is a lot of it. Information is less and a bit more pertinent. Knowledge is what to do with that information. And wisdom is how you react to that information or that knowledge and how do you apply that knowledge to the real world. Advisory sits sort of on the top area between knowledge and wisdom, and data entry bookkeeping kind of sits in the information and data. And as the pyramid gets smaller towards the top, the amount of effort you put in, it's less. This is where, again, your experience and your knowledge is worth more. So what does advisory look like in the real world? Well, you might be a sounding board for ideas, a brainstorming partner. Many small business owners don't have that. You might be helping someone develop a strategy. There's several books out there that you can read that make that very, very easy. You might help somebody do process re-engineering. So kind of walking through every process in the business and observing, hey, is this optimal? Is there waste? Is this achieving the ultimate goal, which is creating value for your customers? One of the simplest things you can do is you can walk through a client in any process. You say, hey, how do you, let's say somebody installs dishwashers, right? You can ask him, hey, from sales to service, what does a process look like? And you challenge each of the steps and ask, how does this step create value for your customers? How does this step create value for your customers? How does this step create value for your customers? And if they can't answer any of the steps as value creators for the customers, then that step is redundant, right? That's the type of stuff that a process reengineering means. Now, business model design or redesign. In today, many people are moving to selling things online, selling things digitally, figuring out how to deliver in the post-pandemic world. That changes the business model. So that's business model design and redesign. Developing decision support tools. This is creating custom reports, automated reports, that sort of thing. Management consulting. This is basically helping your clients manage their business, manage their employees, manage projects. And coaching and mentoring. Many times you can get into coaching and mentoring your small business owners if the small business owners clients look up to you and say, hey, I want to be more like you, then that's where coaching and mentoring comes into play. Now, how do you sell advisory service? I get these questions all the time. It says, look, my customers don't want to pay $350 an hour or whatever value is, because I don't know how to sell advisory services. My clients don't see the value in advisory service. We're going to get into value creation, and that's going to kind of hit home, because I guarantee you that when to get to value creation, most of you are doing 10% of it or less. And when you see all the opportunities to create value, it will hit you like a cold bucket of water, saying, "Holy crap, I'm way behind on value creation." But you sell advisory services when all the precursors to advisory, bookkeeping, systems, controls, compliance, they need to be completed. Your customer will never ask you for advisory services or buy advisory services from you if their books are messy, or if their systems don't work, or if they think employees are stealing from them because there's no internal controls, or they're getting IRS letters. It's very difficult to talk about advisory when all these things are messy. And sometimes you and your firm can do this as well as the advisory. Sometimes it needs to be a team of 2 or more, because it's difficult to provide advisory without getting these things in there, okay? Now, the other thing is clients must trust your judgment. And it's very difficult for clients to trust your judgment if they haven't interacted with you before. So this is why I think advisory is level 2. It's hard to lead with advisory. They will trust your judgment after you made decisions with them together about bookkeeping or taxes or whatever it is that you did. And in many cases, you build trust by accepting you were wrong, by telling them, "I don't know this." I found that the more times I accepted I was wrong, or I accepted I didn't know something, that was a bigger trust building than when I pretended to know something or wanted to, fake it until you make it type of thing. So people will trust your judgment when you are not quick to pretend you know something, or tell somebody, "Yeah, I will research on this and get back with you once I have enough information from my research," or whatever it happens to be. The next one is client needs to recognize you as a master of your craft. People don't want to buy advisory services from a person that dabbles in something. They want to work with experts, absolute experts, somebody that already put their 10,000 hours or whatever it is. And you have already created value with them in other ways. That means you work with them before in other ways. And lastly, you're selling your work and effort. You're not doing that. That was actually you're not. You are not. Apologize. I am going to put that in bold because that's the answer. You are not selling work and effort. You are selling attention and results. Now, what are the principles of advisory-driven accounting pro? Value creation is your top priority. We're going to talk about that. Building and maintaining trust above all else. That means be consistent. Say what you're going to do and do what you're going to say, or the other way. Do what you say what you do. That's what it is. Also, becoming recognized as best in class. People need to see you out there as the best in one particular thing. That way, it's a desirable thing to do business with you because you're the expert. And lastly, and I'm sort of the living embodiment of this, you always share your knowledge, but you can still charge for your expertise. So you communicate masterfully the information that people need to know, but then when they ask you to apply it and when they ask you for attention, that's when you charge. Don't hold information back. It's very difficult to be an advisory-driven accounting profession. If you hold information back, so many of my colleagues think that's their ace on their sleeve. They don't want to give it away. They think sharing information is shooting themselves in the foot. That is the opposite of today's world. Okay, so now we're going to move into sort of the meats and potatoes of this. That was the first 30 minutes is sort of to convince you that advisory is good, and advisory might not be the one thing you thought it was. And I'm kind of trying to get you to see from my perspective. This is a strategic framework for value creation. So I believe that there's 9 opportunities to create value. There probably is more, but these 9 are the ones that you need to look at your own strategy as an accounting professional and decide, am I following these? Am I doing these? Or do I have in my short term a strategy to create value in all these ways? So let's start with 1, positioning value. Some people call this the marketing strategy. So your positioning, your marketing value. The other one is availability value. In some cases, this would be the distribution channel. And what I'm saying is, in every one of these opportunities, you create the value based on your strategy. And I'll discuss that pretty soon. Then we have your pricing value. This is the value created by your pricing strategy. Understanding value, this is the value created by showing that you understand your client's problems and you focus on solving the expensive ones. Performance value, this is the value you create by the performance that you show or do in front of your clients during the delivery of the product or service, and this would be the customer's experience. The results value, this is the value you create by generating output, generating outcomes, the quality of your work, the quality of your product. Then we have membership value. This is the value created by the customers feeling they're a member of your club. Customer loyalty, that could be another way of saying it. There's the tail value. This is all the value you create post delivery by providing service and support, warranties, all that stuff. And lastly, transformation value. What impact does your work, does your product, does your service have in your client long term? How does your client feel changed after interacting with you? So to simplify these 9, I see positioning value, availability value, and pricing value as part of your business model. So this is where you go back to the drawing board and you design these 3. You design these 3 to make sure your customer understands who you are and whether or not they should do business with you. The second one is the actual product and service, the work product of your work, right? What do you output? What does a customer get in exchange of paying you or whatever? So those are these 3. And then lastly, we have the customer impact. What impact do you leave for your customers? Now, I'm going to talk about these 9 briefly from the perspective of an accounting business, of an accounting professional. However, I want you to keep in mind that this is the same framework I use for advisory for my clients. When I offer advisory services, we go down these 9, and I have a conversation with my client on each of these to understand whether or not their business model, their business plan, their execution of their strategy is value creation, right? Because we as an accounting professional, we create value for our customers for the purposes of helping our customers create value for theirs. So what we do as an accounting firm to create value for our customers is the same thing that our customers do to create value for theirs. So you need to be able to mimic what you're doing with your customer with what your customers is doing with them, which is a unique position of an accountant and an advisor, where the work that they do is kind of the same thing that the work that the clients do. Okay? So we're going to talk about tactically, how we execute on these things is having a strong positioning message, pricing based on value, and simplifying your products by productizing. I'm not going to talk about these 3 in details because this is part of my workshop. The 3-week workshop that I will teach in January will go deep into these 3. And I think these are the 3 most important tactics you can implement immediately to get you closer to this value creation framework. And once you implement those 3, then you can create more value through advisory. But let's go over the 9 opportunities to create value. So the first one is positioning value. Do you have a brand promise? When your customers buy from you, is it clear to them what you promise them as a brand you will do for them? How does the customer feel when buying from you in exchange of what is that brand promise? If you don't have a brand promise as a business, it's very difficult for the customer to gauge what is your value, especially when it comes to positioning. The next one is reputation. And this reputation would be reviews. It could be what people are saying about you. Word of mouth is actually probably the biggest reputation one you can think of. Every time that somebody recommends you, word of mouth, that has huge reputation value, which is part of this positioning value. Then we have your horizontal specialization. Do you have a unique set of skills? Have you narrowed down your unique set of skills? And are you saying no to the stuff that's not within your wheelhouse of specialized set of skills? When customers know and acknowledge that you're really good at one thing and one thing only, they give more value, they place more value to that work. So when a client asks you to do something you don't know how to do, instead of thinking that you're serving them by doing it and learning it, you're going to tell them, no, that's not what I do. What I do is this and this thing only. And intrinsically, that increases your worth for the one thing that you do really well. And the clients are usually okay with you not doing what you don't know how to do if you take a lot of pride on the one thing that you know how to do really well, the one thing you specialize in. So specialization is so important from that perspective. And this is not talking about niche or market or target market. It's talking about the one thing that you do. What do you do better than everyone else? The next one is vertical focus. This is the target market or niche. So does the customer feel that you know their business, that you know their industry, that you know the inner workings and issues that they deal with in their type of business? So that's your vertical focus. And when you have a vertical focus, when your business name says, hey, I'm only focused on this thing, or your slogan says, I'm only focused on this thing, your value goes up, and the value you create goes up, because automatically customers feel better about working with you, and they feel more confident that your work it's worth following. How many of you work with clients in which they don't listen to half of the things that they say? It's hard to get an idea to stick. You're always following up on the exact same thing over and over. Typically, the reason for that is because you're not a market specialist. You're not a niche specialist, and customers don't believe your advice as much as they would with a narrow focused person that will go, yeah, you know what, you know what you're doing. You've helped other businesses like mine. I better pay attention. So I think that having that vertical focus really helps at least perceive that. Do you have authoritative content, right? So do you have books? Do you have a blog? Do you have a podcast? Do you have videos? Do you have social media? Do you write articles? A newsletter? All these things play into positioning value, and customers, the perceived value that customers have for you is higher. And do you have use cases or examples of your work? Now, I'm going to put seed transformation value, because this will make full circle at the very end, because transformation value basically is your use case at the very end. So we'll discuss that. Now, availability value. This is an interesting one. How quickly are you available to help your clients? How long do clients wait to get a hold of you? Or how long they wait to get someone from your firm to start working on the job right away? Being able to respond fast, work quickly, work fast, be immediately available has value. However, sometimes it's the opposite. How many of you have gone to a restaurant, this is pre-COVID times, that is completely empty? Your perception of an empty restaurant typically is that it's not that good because they have too much availability. So you have to figure out whether your brand is the too much availability brand or the limited availability brand. And depending on your perspective, it could be valued one way or the other. For example, Walmart, it's an high availability brand. You go to Walmart expecting that there's stuff everywhere, right? But if you go to a very unique store, like let's say a store that sells antique Porsches, right? Antique race cars, right? You don't think they're going to have everything out there. Having a limited edition, having scarce amount of supply increases the value of the product. So as an accounting professional, you can do the same, and talking to your to your clients about, hey, are you in a high availability market, or are you in a unique scarcity availability market? Obviously, response time plays into this quite a bit. Then obviously your location. So if you only work with someone locally, right, that plays into availability or scarcity. In my perspective, sometimes when customers see you as not a local person, but a specialist, it makes more sense to them, and is more valuable to them. In many ways, most of my customers are not in Miami where I am, and their thought process is, look, to work with such a narrow expert, I don't expect them to find them locally. I expect them to be in some remote, exotic place because there's so little of them. So don't think of customers in your location as your direct market, right? Especially in today's world, any customer anywhere could be a high valuable customer. And being close or not being close, in some cases, for some people it's valuable, and some people it's not. Either way, the platform. So how do people pay for your service? How do people hire you? So we have all these companies like TaskRabbit and Elance and all these freelancing companies. Is that person in a platform worth buying from? Like, for example, I buy most of my stuff from Amazon. Even if I really like a product and it's not in Amazon, I probably wouldn't buy it, because purchasing from the platform with the system in place I have in Amazon, my history of sales, all that stuff, I want it all to be in one place. So what platform are you on in terms of how people purchase your services, acquire your services, okay? And ease of communication, right? How good the initial communication with your clients is, how good the pre-sales process, are you creating value up front? That's all part of availability value. Then we got pricing value. Pricing integrity is a really important one. Does your customer perceive that your prices are negotiable? Think about it. If you ever had a service provider offer you a service or a product, and you had the feeling that they needed the business, and you had the feeling that they could lower that they can discount that you can negotiate that, you as a consumer will automatically, shoot the first request for a discount. But if you as a brand, as a service provider, have total price integrity and are okay to walk away after you give a price and the customer says no, that increases your value, that increases your price integrity. It's okay for a customer to say no to you now and avoid charging for a discount, charging with a discount, because it'll be very difficult to come back from that discount, and just wait until the customer's ready to pay for your price. Also, your pricing structure. Do you charge by the hour? Do you charge fixed price? Do you charge value price? Your actual structure in which the customers have to choose to buy from you or not, that can create value in itself. Some customers find hourly rates valuable. Some customers find fixed rates valuable. It will depend on your customer. So again, you can create value by choosing the price structure that works best for your customer. Your price point, or your perceived comparative pricing point. So what I mean by this is, when people hire you, do they perceive you that you're going to be average price when they compare you with other people? Are they going to perceive you to be amongst the least expensive, the most accessible? Or do you have the perspective to be that premium, high-end stuff, right? Like, when your customers refer you to other customers, do they say, hey, work my accountant, but hey, not cheap? That's a good thing. You want them to say not cheap. You want, or maybe you're not, depending on what you want, right? Some people ask you, hey, where should I buy shoes? And you tell them, hey, go to this store, but it's not cheap. They might never go to that store. So it depends on the target market that you want. It depends on what you want. You can create value by creating a perceived comparative pricing point. Offering options and choices creates value in itself, because customers compare you with other options, not just compare one price with other providers. Timely discounts. I only do discounts when people pay early. That's the only time that I discount my price. Like when I sell a webinar, for example, I don't discount the webinar. I say, if you sign up early, I'll give you a discount. So basically, because it's improving my cash flow, right? And obviously not improving my client's cash flow, but that's the only time that I do a discount. In any other context, I don't do discounts and I don't negotiate. That's the only thing I say. Yeah, you want to pay less? Okay, pay me ahead of time, a month before I do the work, or whatever it happens to be. Okay, and the ability to downgrade and upgrade. This is such an important thing when you buy something, and knowing that you can upgrade to the next one without paying full price for the upgrade, or when you have some sort of monthly subscription and you go with the highest subscription, but knowing that you can always go down, that's a huge amount of value. And in accounting services, that needs to be part of that too. Understanding value is what I call the scope of work. How good did you do a needs assessment? How well does the customer feel you understand their problem? How you identify their problem? Knowing how to have a value conversation to discuss what the customer values. knowing what's the job to be done, right? When customers hire you, what are they hiring? They're not hiring an accountant to do accounting. They're hiring to solve a different problem. This comes from Clayton Christensen's book called Competing Against Luck. That particular thing, jobs to be done, is probably one of the most impactful concepts in consulting and accounting that I've ever learned. That's Competing Against Luck, the name of that book. That's in the slides at the end, all the different books that I recommend. Am I focusing on the expensive problems? Am I focusing on the little things? Sometimes customers self-diagnose and their diagnosis is not good. You need to have a deep conversation to understand what is the real underlying expensive problem. Performance value is the customer experience during the process. So have you designed what the customer will feel in every email, every phone conversation, every report that you send them? What does that experience look like? I like to think about tableside guacamole, right? Every restaurant, Mexican restaurant that sells guacamole would be between $5 to $8. But when you order tableside guacamole, that's usually between $10 and $15. Same guacamole, same food, right? It serves the same purpose, but one comes with a show, right? We cook it right in front of you. There's tons of value in that. In bookkeeping, that's also the same. Some things that customers want to see, maybe they want to see you clean up the books. Maybe they don't want to see you clean up the books. Maybe watching someone clean up books, it's a negative experience. Watching someone clean up the books could also be a positive experience. I also think about see-through kitchens, right? When you go to a restaurant and there's see-through kitchens, or you walk through the bathroom or whatever, see-through kitchens are usually much cleaner than every other kitchen in the world. Why? Because customers can see it. And then you have to have more staff, you have to have more cleaning, more procedures to be able to have a see-through kitchen versus a hidden kitchen. Same thing in accounting, right? So if you're gonna have a see-through kitchen, you're gonna have people watch the process. You're gonna have to be able to charge more for that. That's more valuable because you have to be more careful, of course. Results value is the economic output of the work. This is the emotional and spiritual value of the work. How does your work make your customer feel? Not just how much money they made them or how much money they saved them. Is there a guarantee? Are you de-risking the purchase? Are you offering money back guarantee if the customer is not happy or they don't get the results? The quality of the work, of course, this is subjective, but if the customers feel they get good quality, that has tons of value. The membership value is, do customers feel they're in a private or exclusive club? So after working with you or after hiring your firm or being an active subscriber of your firm, do they get access to other people don't? Do they get access to things that other people, whether it's knowledge or response time or availability or ability to send you an email or a text or a phone number? Or do they feel pride on working with you? I mean, I think of like Harley Davidson. Harley Davidson customers are the only customers in the world that tattoo the logo of a business in their body, right? You've seen people with Harley Davidson tattoos. That's a private exclusive club effect. Loyalty program. Do customers get any perks from buying from you over and over and over? Do they get any perks from bringing more customers? Association with the brand, that's similar to the Harley Davidson example, right? So, do you feel any value associated with that brand? The tail value are the post-service benefits. Ease of taking the work product to another provider. That's huge. I use that as a huge selling point, telling people that, look, my work is very easy to port to another accountant if something happens to me. I took in 2 clients this year in which the reason for switching accountants, they said, my accountant died of COVID, like literally. 2 clients like that. And it was impossible to get amortization tables and a bunch of stuff that I wanted because there were little accounting firms that didn't have a support staff. So when you make it easy to transfer that work product to someone else, that's extremely valuable. Are there any what does a warranty look like? How long you warranty your work? Post-warranty access to service. So I remember a couple years ago, maybe 20 years ago, before you bought a car, maybe you wanted to buy a car in which the parts were cheap and easily available. I'm not sure if that was American cars or Japanese cars or what the situation was. So do people feel that they have access to answering a quick question or they have an audit? Could they have ask you real quick for a work product, how easy it is for something way after the work has been done and way after the warranty has been completed, how easy it is to interact and do business with that firm. And lastly is transformation value. What does your client's business and life look like after working with you? And that retroactively feeds back into positioning value, because are your customers willing to share their transformation story? Are they willing to put a review up, a testimonial? Are they willing to do a reference? Are they willing to talk to another one of your clients and tell them about how working with you transformed them? Can you use their use case as an example to show people your work? So I wanted to cover a couple other things, but I wanted to quickly just discuss how can you learn more about this concept if you want to get really deep into the three things I think are the most important, which is your positioning, drafting a unique positioning statement, communicating to your customers what your expertise is, value conversation and value pricing, and streamlining your services by productizing, selling one simple, easy to quote, easy to price, easy to understand product. So the way this coaching program works is a 3-week program, starts Monday, January 4th. It's going to be weekly. We're going to do 1 week positioning, 1 week pricing, and 1 week productization. I'm going to teach you a concept and give you some homework. You can participate in 3 ways. You can just attend the webinars and get the self-paced exercises or homework. You can do the webinar and also do a small group feedback session. It's going to be limited to 5 people only. We already sold 1 right before the webinar started. And one person, we only have 1 space for 1, a webinar with one-on-one mentoring, same 3 concepts, but then you will have me for a specific number of coaching periods. So the pricing for the webinar is $375 to just access the webinars and the homework, $1,500 to do the webinars and small group coaching. Again, I'm only taking 5 people, 1 already sold, so there's 4 spots to that. And the one-on-one mentoring, which is limited to just 1. I don't have the capacity to help anymore, so I'm just taking 1 person. If anything, and I don't care if people don't do it, I'm more focused on the small group one because I can help more people at the same time. So basically, and all the details about the webinars are there. I'll give you a quick 2 coupon codes I have for early registration. It's all the stuff is in the slides, and I actually have a video where I explain that stuff is all on the slides. But if you, let me just go back to the coupon. If you sign up before 11:30, that's today actually, that's 20% off on either the webinar only or the small group coaching. Or if you sign up before December 15th, 10% off. Otherwise, you pay the full price and they will sell. Some people wait until last minute to pay. That's totally okay. And there's the link for it. A couple other questions I wanted to answer is, what if you don't like the program? Look, like everything that I do, and this is part of the results value that I talk about here, is if you're not happy with it after the first session, I'll give you your money back. No questions asked. Just go through the first session and tell me, yep, it didn't work for me. That's simple. Okay, so I wanted to just kind of simplify that. A couple of things. How does the homework work? So the way it's going to work is I'm going to teach you a concept. Then I'm going to give you an exercise that you need to do on your own. And that exercise would be like drafting your positioning statement, like drafting your pricing strategy, like drafting your productized service. If you are in the webinar only, you will only do the homework and not get any feedback. But if you are in the small group coaching, again, it's only 4 spots left. You will be with me every week and 5 other people, and we'll be discussing it and giving you direct feedback on that. So I hope to see you there. I'm going to open it up for questions. I'm going to open up the coupon code. It's in there, and the link. You can download the slides and copy and paste it. The slides in the chat box. Let me see. So I'm going to answer some of the questions. So someone says, I disagree that you cannot add value as a bookkeeper. As a bookkeeper, I help my clients improve the amount of information that they put in their accounting system. I help them improve their business and run it more efficiently. Customers are happy to have their books ready for taxes, and I add a lot of value as a bookkeeper. Shelly, I agree with you 100%. I am not saying that you don't. add value as a bookkeeper. I think that bookkeeping and accurate books is a precursor to advisory, and I think that advisory, again, is helping people improve their health, increase their wealth, and leave a lasting legacy. I find it that just with bookkeeping is difficult to do that. Let's see what else. Somebody says, where do you find clients are willing to pay $350 an hour for advisory? I can't seem to find those clients. Elizabeth, they need to find you. They need to find you. The only way for them to find you is, number one, you have to have a unique positioning strategy so customers know how to get to you, and you need to focus on having less customers that pay more. And for that, you might need to get away from your current, you have to shake up your current client base, right? Because that's part of it, right? You got to find the clients that value your work highly, highly, and that might not be already in your current customer base. And for that, you need to value price, understand value pricing. And I think that probably the most important one is to productize. That's not many people productize, and I just have a quick slide on that. Productization is identifying your signature service and streamlining it into a fixed scope offering with a fixed price. You need to learn how to name it. You need to learn how to create it. You need to learn how to sell it. And when a bunch of customers come to you and they ask you how much you charge and how do you work with you, you say, we're going to start with this product, right? A diagnosis, whatever it is. We're going to start with this product. You're going to pay a fixed price. There's not a lot of selling going on. People just simply decide, look, I can get my foot in the door with this consultant, with this accountant, with this $500 product, whatever it is, and you streamline it and you make it very easy to do in quantities. And then at that point, you can choose whether or not you want to work with that client. So that last one on productizing probably is the best one for people that have already started with niching and what's the next one on value pricing. That productization is probably the missing key. So download the slides. I wanted to go just gonna go over. I have what's called my library, right? This is all the books that I read that have influenced my thinking and influenced my business model. You can actually you don't need to take any webinars with me. You don't need to buy anything from me. You read all those books and you will probably learn what I know or implement these things on your own. So there's a set of like maybe 20 books that have really, 20, 25 books that have shaped my worldview about how to do business as an accounting professional. Also, there's a slide where I have additional videos where I talk about some of these things in more depth. I'm trying to rush and do a lot of stuff in this hour. Again, if I would have slowed down, I probably would have covered a lot more ground. But you can watch the recording of this. I'm going to send you an email with a recording on it, and you're welcome to watch those other videos. I'll shoot you an email with a link of those videos as well and the link to the slides. I'm going to run one last polling question and then see if there's any other questions here that people might have. So we'd love to know what you thought about the webinar in itself. Was it useful by itself? I'm trying to see. Oh, somebody says, are you offering something after January? So right now, because of the tax season, I'll probably be offering something after tax season, maybe in the summertime, assuming I have time to do this. These type of coaching programs are really, really time consuming for me. I'm not a huge fan, obviously, of taking time off serving my clients to helping other accountants, but 2 to 3 times a year I do these coaching programs because I think that there's a handful of people out there that really need my help, that want my help, and that would love to understand pricing, productizing, and positioning, which I think are just 3 really important things. So like I said, maybe after tax season, summertime, I'll do another one. If there's enough interest, we'll gauge that. But for now, the January program is the only one that we will have. Okay, I think there's no more questions. Again, I will go ahead and download those slides, watch the recording. Trust me, I think there's a lot of value here, and I hope that you're able to take advantage of it. Thank you very much, guys, and I'll see you on the next one.